All right, I believe we are on week 6, and I am Wesley Yates. I'm out in San Antonio this week, checking on one of my businesses out here in the house. Actually, we bought this house, I was telling y'all, with Bitcoin. uh, Liquidated the Bitcoin and had to use the cash, but nonetheless, same thing. Um, so, had a good week. Looking at the market this week, it looks pretty good. I'm kind of excited to see things turning around for us. Don't think we're out of the clear yet, but we'll see. Looking at some of the numbers, I'm going to try to go a little quicker. I went ahead and filled out the weekly tracker, and that's already done. So I'll just show you the total what we're looking at. We got another full dollar in this week, so already seeing this thing start to pick up momentum. Before we dive into it, I want to go over real quick. I am not a financial advisor. This is not financial advice. You can read the disclaimer. I won't bore you with reading it all. I'm just going to hold this up here. And I encourage you to do your own research. This is what I'm doing for my family. This is what I'm doing with my own money. If you find this useful, awesome. If you find this not useful, sorry. Do your own research. If you've got anything that you want me to cover or anything that you want to offer of your own wisdom and knowledge from your own experiences, feel free to comment that below. I always like to hear what other people have to say. Without that, let's dive right in. For those that are seeing this, this is our strategy right here that we're going to be going down. We're still in phase 1 of the strategy. Probably here in the next month or two, I will show some of the other accounts that I have that are into that phase 2, so you can see what stocks we're looking at that and how, once you've had a little bit more money occurring in, where this thing can go once it's got some legs to it. But if you want to get started and you want to look at this and you don't have a brokerage account, I use Robinhood, and the link to join up, I believe we both get a free stock if you join. Everything that I'm doing here is free. I'm not asking for any money. If you use my links to sign up, Robinhood gives me something, and that's my only reward here. Also, I use Snowball Analytics to look at a lot of stuff, to analyze a lot of stuff, to give me some neat tools. I'll show you all that. But if you want to get your own Snowball Analytics, I think they also give you a discount, and I think they give me like $5. But there's the link to that, and there's my promo code for using that. And then if you're looking at this and want to see how our portfolio is doing that we're using for the example, the link right here will take you straight to that portfolio. So I don't know how else I can be transparent of how the strategy is working for us. And if you want to take a look at that and see, there you go right there. But what is the strategy that we're doing? We're in phase 1. We picked 5 weekly payers. We're looking for an average dividend yield above 35%. I think we're still well above that. Check the dividend yields, and you want to make sure they're stable and increasing. Last week's video, I showed you just some of the high level tools and then the websites, the things that I'm looking at to see where those yields are stabilizing at or increasing. A lot of the ETFs, you'll see them dripping a lot, dripping down, not, I would say, decreasing down, falling off. So keep an eye out for that. If you want to see what stocks I'm using, there's a link to those right here. I'll show you those in just a second. And we are going to show you how shares of weekly pairs will be bought evenly per dollar into each stock. That is the strategy. That is the automation that we got set up. I do have 2 stocks in here that are manual buys. So the only thing I really have to do is get on here once a week, which I'm already doing, so I can check in with you guys. So you will see the weekly performance of all of these. You will invest your desired dollar amount. I'm using $5 a day because, I think a Starbucks coffee is more than that. And that's something that we can really play with right there, is a little bit done consistently over a long period of time. That compound effect, that reinvesting effect, I think we're going to go over the drip effect, which is reinvesting our dividends, really adds up. So once we get the dividends, we are going to diversify into new weekly payers. When does that happen? Once we have another $5 in dividends per week. We've only really been getting that $1. I think we just crossed the $1 threshold this past week. Y'all see that? And we're going to just reinvest into our currently 5 to help those ramp up. Once we have $5, or your example of what is your weekly into each stock total. So if you're doing $5 a day into one stock, that would be $25 in dividends before you would diversify into the new dividend stock or ETF. Then we're going to continue to use the dividends to increase all the way up to 75. So once we get to 10 weekly payers, we're just going to let that reinvest into those until we get $75 in weekly dividends. That's when we're going to go into phase 2. We will pick 10 monthly payers. We will be looking on our monthly payer, something that's really, really stable and only a dividend above 10%. Shares of those will be also bought evenly per dollar. Everything that we're doing is by dollar, not by share. And we're going to keep doing the same thing over there, growing that, and you can see the breakdown here. We'll go into that more and more as you see that happening. I might even make a slideshow so you can see kind of the waterfall effect of how we're ramping this thing up. All right, let's go into it. So here's the stocks that I'm using. I have added a few more of these from the research. I actually added these into another portfolio that I'm trying out in my, I guess you could say, my main portfolio. And that one I'm doing a lot of research, ramping a lot more, playing with a lot more dollars to really see how this thing's going to turn out, ramp up before I put these into my kids' portfolios or even give them options to pick. I am letting them pick which ETFs and which stocks they like in their portfolio. But here's the ones that we've been using so far. I just updated the dividend yields this past. I wanted to go over this. I almost forgot. There are a few you see here that are in red that I put a note over here that I'm saying I am pressing pause until the yields increase. There's been a few, this one right here, the top one, that was very concerning. It dropped all the way down to a 10% yield. I'm just not happy about that. It's still on a downward trend. If it bounces back up, we might add it back, but that's not going to really work for us. I'm not selling it. In my main portfolio, I have not sold it. I don't think it's in one of our portfolios here, but I'm not selling it. I'm holding it. It's still paying dividends, just not the ones, just not to the degree that I really want in my portfolio to keep putting more and more money into. Remember, we are buying cash flow. That's what we're looking at. So when you look at those, if you have those in your portfolio, do what you want, but if you're going off of my advice and mimicking this, I am pressing pause on buying more shares of those stocks. And those are these right here, as you can see, they are dropping. Now, I have looked at this one right here, GIAX. I have continued in my main portfolio of reinvesting into that. I am keeping a close eye. It is stable. It's just lower. So I'm going to see how that plays out. There was one down here of the monthlies. I know we're not in this phase yet, but just to go ahead, if you're already in your phase of ramping up to where you're into the monthly buying, this one has dropped significantly below that 10%, and it doesn't look like it's bouncing back. It's consistently looking downwards. Yet again, not selling, just holding and not reinvesting back into those. I have looked at new ETFs to replace those. If I have a certain, or you have a certain dollar amount that you're looking at investing each week, that's why I'm constantly looking at new ETFs and new stocks. REITs are really good for monthlies as well. Okie dokie. Well, let's see how, I just want to give you all that quick update. Let's see how our portfolio is done this week. So right here we have 144. We've gone up. We already have our 25, plus we made some money this week. Made over $1 this week. And let's look at the week. Let's move. Sorry, my little head's in the way. So I'm going to click the week. I guess I could have just scrolled up. That makes more sense. Sorry about that. And 1 week. So 1 week, we're actually positive. I think this might be the first week that we've been positive. I know we've had a lot of down weeks, a lot of negative weeks. So we've been buying on discount. And this week it looks like we really had a good jump up and then holding. Nice. Liking the looks of that. Let's look and see how each individual stock is done. And check our one thing that we want. Did it pay? All right. Looking at our first one here, which is Blocks. Blocks actually had a negative week. I think 3.8%. And I've already looked on here. We do got a good one already pending. And looking at, we had our automation up there. Here is our history. Let's look at the history and scroll all the way up. We got our 12 cents for the week. And it looks like we can see next week is already about to pay. It's already been declared. It's going to pay 16 cents to us. Great. So yet again, even though this one was down, it still paid. All right, let's go back and see the next one. I'll show you all the tracker at the end. I've already filled that out to try to save some time. And let's go to Coney. See how that's done for the week. Looking pretty good. So we actually had a positive 3% here. And let's see if that one did what we needed to do, which is pay us. Because we worked hard holding that, right? Okay, here we go. So looking at it, paid 30 cents. I think that's our top for the week. So 30 cents on that. That's really going up. So looking good there. And come on, you can do it. Who? Got our Who account. See how this one did for the week. Also positive. Oh, it's a good one. 7.6. So not a bad past week. 7.6 increase. This, as we go down, I believe this is one of our manual buys. No, it's not. I lied. Oh, yes, it is. We just bought an extra $1. Remember, we had an extra $1 in dividends payout, and we reinvested that into. So that's what we're going to do. So you see, there's the 5. We're going to need to do our manual buy. This is the only thing we got to do for this portfolio is do our weekly manual buys. Boom. All right, that's in there. We made 20 cents this week, so that's doing good as well. All right. Bitcoin not doing bad, bouncing up, and then our next one, TSII. Okie dokie, let's see. Looks up for the day. Let's see where it is. On the week, looking good. So plus 5% this week. So also doing very well. Going down on this one, this is a manual buy. So you can see we had our $5 that we invested, 19 cents the weekend before, 23 cents this past week. So that's looking good. Let's put our manual 5 in there. Review. And that's for next week. So we got that done. And that's queued. All right, not looking bad. We'll go over all of it on the tracker so we can see a total. But let's not miss out on Ulti here. Ulti for this past week, it has done plus 4.24. So nice little uptick. And going down, we can see we had 25 cents this week. Got all of our dollars in there, so you can see 14 the week before, 19 after that, and then 25 cents this past week. So that one's doing pretty good. All right, looking at all of these right here, this is this week. I just filled this out, and looks like we had a nice. We're keeping it. We're starting to stabilize at that 27% growth rate there. And it was this. So we have. You can see each week these have increased. So minus this one right here. But remember, I think this is the one where I was saying I see some where they'll have a low week and then they'll come back up. This one came back up. This one also made some good. So we have another $1 to invest. So we're going to pick it into one of these that we haven't put because we want to try to keep them as even as possible. I am going to look. I think we had one that was negative. So I'm going to look at putting that $1 into that negative one because we're dollar cost averaging, and I love to dollar cost average down. So if it's a negative, that means it's on discount. So I think that first one was the most loss for this week. And we're going to go over here and we're going to click on this and we're going to look at total return. Total return. So it is actually still this one. We've already bought one there. So I'm going to go to our next biggest loser, which is the blocks. And blocks was still down this week as well. So that'll work out for us. And so we're going to put another $1 here and invest that. Invest that extra $1. So we're just going to do $1 buy. Boom. This will not affect our reoccurring. We still have there's our queued right there. There's our $1 reoccurring every day. So we're still going to do dollar cost averaging daily. We'll just throw an extra $1 from our dividend profit back into the shares. So we're looking good. From here on out, we should have at minimum $1 every week to reinvest. And that you're going to see to start help grow this portfolio a little quicker. So just to make sure we don't forget that we did that, let's go ahead and add that here, plus an extra 1. And now we've gotten $3 so far total that we've been able to reinvest. And each week we should see this be over $1. This is great. We're starting to see that compounding, that drip effect take off for us. All right, so let's see how it's looking in our Snowball Analytics tool. We're still negative overall, and however, our passive income is looking really solid. We're still well above our goal of average above 35% in our weeklies. So we're doing really good. Looking at our holdings as a total, we have quite a few that are, you can see the dividend yields on a breakdown. We're still above. Our lowest one is this 37%, which that's still phenomenal dividend yield. It's still phenomenal passive income. And looking at some of these, you can see, I'll just click on a random one. Actually, let's just use blocks, just so that we can see that average price. You can see it's still coming down. It started, we're still on a downward cycle on that, and every little dot is a day that we bought. So we're still averaging downwards, but those dividend yields, as we can see, they've estimated 9 cents a share all the way through till the end of this year. But let's see where they're actually paying out at. So this has been paid right at 9 cents. So they're going to estimate off the last payment. Before that, it went down, but it went back up. We got 10, 9. So it's fluctuating right here between that. So we'll see if that can come back up and get some of these. But you can see as far back as the beginning of this year, it's been balancing around this 8 to 11 cent range. So we're looking good. I do feel like it could bounce back out, but at that, where we're at with that yield, we're still looking pretty solid. It's still a 37% yield. I'm not hurting on that, especially when it's looking like it's still stable right there where we need it to be. All right. That's just one of those examples right there. I do want to jump over and still show y'all some of the other tools in this. So let's look at the goal. We're trying to hit this. Look, this is the year she graduates, and I believe, let's see, 18, so that'd be 19, 20, 21, right here. This is the year we're aiming for. So it looks like she would be making $37,000 a year passively by 2033, and then just over our goal of $52,000 a year. Now, keep in mind, once we start adding more money, and as she starts working and wanting to put more into this, we should see this come down quite a bit. But this is if we only added $100 a month, which we're adding 25 a week. So there's technically, was that $108 a month? You do 25 times 52 divided by 12. So 52 weeks in a year, but there's, it's not an even 4 weeks. So this is just doing math as if there was only 4 weeks in a month. So not going to make a huge difference, but every little bit adds up. Still on our way. Looking at our calendar, seeing, hey, when are we getting paid? You can see this is already kind of coming up quite a bit. Now, this is based on what has already been declared, based on what we already own. So only on the number of shares we already own. As we continue to reinvest our dividends, reinvest our money, and grow, we'll see this continue to go up. And here is we're back. Remember, TSII was moved over to Thursday. I guess they caught back up, adjusted. It is now. We are back to, for my OCD sake, getting a paycheck every single day, which I like that. So nice to have that rocking and rolling back to, looks like as of right now, we're on track to clear $4, almost $5. And I think going back to the main page, or we can look at our growth. This is growth compared to the S&P 500. So the S&P 500, I believe, is the orange, and our portfolio is that. So we're mimicking the S&P 500, just a little below it. So our portfolio is worth about, what is that, $10 almost less? Not bad. I'll take that. $10.93 under the S&P 500. And this is not built for growth. The S&P 500 is built for growth. Remember, we are building this for cash flow. If you're a growth investor, there's better stocks for that. But for the fact that this is not focused on heavy growth, and we're not far off the S&P 500, and it's cash flowing, I'll take it. I'll take it. And look at this. Let's go back to the dashboard. Trying to look at, so here's our top gainers right here. So out of 5, we got, remember we used to have all 5 in the red, had a better week, only had 1 in the red, and now we got 4. That's why I don't really worry about chasing the prices. I'm looking at chasing cash flow. That's what we're looking at. Dividends received. This is the screen I was looking at. So July, looks like we only got right at, what is that, $2, right at $2 for July. We already got $1, and we're only a week into August. That's how quick this stuff takes off. And we're going to see that. Looking at that next 12 months, if we didn't invest another $1, we'd make almost 74 bucks, which is fantastic for as little as we're investing and what this can do. Well, what we're looking at today is teaching the DRIP method, which is a fancy way of talking about dividend reinvesting. You actually have seen us do this now 3 times the last 3 weeks, where we've taken our dividends and we've reinvested them. This is something that can be done automatic, where you can in Robinhood and just have dividend reinvestment automatic, but that is going to be reinvested back into that same stock. If that's something for you that you like to do, great. We are doing it where we're not taking it back out. We're going to eventually set our reoccurring investments and our dollar amount based on new money plus dividends. And that's really what we're wanting to do. Eventually, will we be living and paying off bills with our dividends? Yes, but to scale our portfolio faster, we are going to be doing the dividend reinvestment, and that's how we're doing that. That's the strategy of diversifying, how we're going to diversify into new ETFs and new stocks, as well as how to grow our weekly and daily investments into each stock. So it is a great help in that compounding effect, that growth effect, and really going. So that, I think you've seen how that's working, but just to kind of give you a better explanation and really why it matters is, as it says right here, dividend reinvestment allows your money to continue to work for you. As you purchase more shares, you may earn more dividends, which can be reinvested again. So you're creating that compounding effect is really what we're going for. How this rates to our strategy, it really focuses on that consistently investing in as the dividends are paying us, we're reinvesting into dividend paying stocks. Rinse and repeat over and over again. All right, so that's why I like to invest into dividend stocks instead of just growth stocks, is because the more shares I own, the more dividends, as long as the dividend yield doesn't drop, the more dividend yields we're getting. So like I said, I don't look at stock price nearly as much as I look at dividend yields and the payout rate, which is that dollar per, or I should say dollar cents, whatever, that pay per share. That's what we really like to focus on. And as you saw, that's how I really analyze the stocks as I'm looking before I add anything to my portfolio, and what determines on whether I press pause and maybe come back later. If a stock starts performing again, if that provider of those ETFs figure out their algorithm and turn that back the right direction, I'll start putting my money back into that. If not, I'll just hold it and hope it keeps cash flowing until I make all of my money back. And then eventually, if it just quits and it's not cash flowing anymore after that, that would be the point. If it quits cash flowing, I would sell it at that point. But for right now, as long as it's paying a dividend, I have something to reinvest, to drip, and that's the main strategy. All right, I appreciate everyone on here. Feel free to like, share, and subscribe if you'd like. If you have questions, by all means, ask them. If you have any suggestions or advice, or of any other ETFs, feel free to throw them in here. That is all I got for the week. I think we're fixing to go eat, and my family's waiting on me, so I'm going to cut this short here, and hope everyone another great week of investing. Thanks, everyone.